Today is a glorious day because today I'm going to have a nice juicy ribeye steak for dinner. But on top of that, we are in a stock market rally. Woohoo! Oh man, congratulations to every single person that has been buying this massive drawdown that we have had over the last several months. Honestly, I'm going to take that back. Massive drawdown that we've had in the last, yeah, it's been about like 5.5, 6 months, give or take. The market pretty much topped October of last year, I believe. I'll get to the charts momentarily, but if you've been following me along, this is my YouTube channel public profile here. I have been buying, I believe I bought close to $36,000 worth of stock on this profile. All in all, in the last 6 months, I've bought over $60,000 worth of stock. I am a big believer of buying the fear, buying the dip. If you're a long-term investor into a company, pick up discounted shares for the future. If you are a trader, it's a very simple terminology. You buy the fear, you buy the blood, you buy the dip, you sell the rip. And if you've been doing this for the last 6 months, well, we are about to literally just tear. I can feel it. We're probably going to have a luxurious summer. And a lot of FOMO is going on right now, primarily with big tech and speculative stocks, risk on assets. And these are going to be quick. I posted a video yesterday. If you have time, definitely check it out. But over like not even a couple weeks ago, I want to say maybe like 10 days ago, my SoFi position right here was actually down by like 1 or 2%, I believe. My AMD position 2 weeks ago was actually down 5%. My hood position was down close to 30%. My Adobe is a little bit of a lagger, but Adobe was down, I believe, 17, 18%. Palantir has a lot of external stuff going on. Meta was actually down at one point of 10%. PayPal was over 25% down. Oracle, man, I honestly should have been like more aggressive buying Oracle, but in a blink of an eye, talk about a game changer. Oracle was down a couple percent for me, like literally last week, and it is getting a gigantic rally. These stocks move so quick, and if you are a very disciplined investor, disciplined trader, and you've been buying the dip out here, congratulations. Because right now, the S&P 500, it's broken all-time highs. Crazy, right? Every single bear bunghole out there that basically pretty much said, yes, that's right, you're a bunghole bear. I'm a 90s dude. Well, I'm born 1988, but I grew up on Beavis and Butthead, man. I'm about to be 38 in less than 2 months, 37 right now. But I also... well, I have a potty mouth. Let's just leave it as that. Yeah, every single bunghole bear out there that pretty much said that the SPY is going to be doomsday apocalypse until the end of the year, I didn't see it. And you want to know what I did? I bought the fear. I bought the entire way down. Now, this is actually something very remarkable, okay? Because we are in a massive V-shaped recovery. V-shaped recovery on the markets, V-shaped recovery on the major indexes, and I mean, just look at everything. Every single thing. Obviously, the Dow has a ways to go, but it's going to get there. Risk on assets are starting the rally. Okay, talk about SoFi, very much starting its upward V-shaped recovery. AMD just broke. I really want to talk about AMD a lot today, but AMD just broke all-time highs. Adobe is a lagger in the SaaS. Obviously, you got Salesforce. Actually, Salesforce is pretty much a lagger too. Well, software was basically pretty much like the start to this downward cycle, and then we basically had the Middle Eastern stuff. So software is probably going to be very much a lagger. But as for other risk on assets, I mean, yeah, they are beginning a nice rally higher. Now, as for the S&P 500, it just blows my friggin' mind. So understand that we are in a very quick market recovery. Now, what is really leading this market recovery? Obviously, a lot of small caps are very much rock and rolling. But these stocks, such as SoFi, Big Tech, the semis, and SAS, when they get rolling, we are going to be in a all market, just a dominance period. Very similar maybe to last year. Obviously, maybe not as aggressive of a move as last year, but understand that the V-shaped recovery during Liberation Day, it was very different. And the V-shaped recovery last year, no two V-shaped recoveries are ever the same, but the V-shaped recovery last year was very much more spread out. Obviously, this V-shaped recovery for 2026 here, knock on some wood, I mean, I don't really know why we would fall off a cliff again, because we've already had so much scary stuff out of the way. Middle Eastern affairs are basically out of the way for the time being. Obviously, we're seeing that oil surging prices. It's affecting inflation, but it's not affecting inflation like it did through the 70s. Very different time period. Okay, but we're definitely due for a pullback. But is it going to be a pullback on the SPY all the way down to like $650? Probably not. We're more than likely going to have a pullback of a couple percent on the SPY, maybe on the Qs too. And that's going to be a signal for really like anyone that is really thinking about, hey, is this maybe a bottom? Should I be getting in? But understand this. If you have been buying this downward cycle in the last 6 months, you are in a phenomenal place like I am. You got your positions built, you're picking up discounted shares, and that's pretty much about it. Now, the biggest thing about it, though, is that the major indexes obviously have a V-shaped recovery. Like I said, speculative stocks, high-risk assets, but very high growth rate stocks like SoFi, understand that SoFi here, hold on, I gotta look over here. Okay, there we go. Understand that SoFi, and SoFi just got kicked down a little bit. Understand that SoFi, back, even January of this year, year to date, SoFi is still down 50 friggin' percent year to date. Crazy, right? Year to date, SoFi, crazy. AMD, obviously AMD is going to be busting like crazy. I do want to talk about AMD for a little bit here. So AMD is going to be entering into a high growth cycle. This is what these stocks primarily do. People know that this is happening. People also know that a lot of future companies are going to be choosing AMD over NVIDIA. Okay? It doesn't mean NVIDIA is not a great company. It doesn't mean NVIDIA is the world's, it's going to magically go from the biggest semi to the smallest semi. But it means that AMD is going to take away market share from NVIDIA. How much? That's definitely questionable. Now, another thing about AMD too is that their growth rates are going to be accelerating as NVIDIA's growth rates are going to be decelerating. Wall Street, they're going to notice this and they're going to start the transfer. Understand that when this happens, this stock can move tremendously. It's one thing about semis that I've learned over the past couple years is that you have technology stocks just move. You're talking NVIDIA on a 2-year basis. NVIDIA. Let's look on NVIDIA. Go back 5 years. You're talking about how much is NVIDIA up in 5 years? 5 years, NVIDIA is up what? 5 years all the way back to 2011 bucks to 196. What is that? Almost like a 2,000% return. They move incredibly quickly. So AMD is about to go through a growth cycle for the next couple years. Now, does this mean AMD is going to 10x from here? That would be a ultra bull statement. And by all means, I'm not a ultra bull on AMD. My bull case on AMD, honestly, is probably maybe 1,200 a share over the course of 3 to 5 years. So definitely very much a 5%, 500% gainer. My base case would be around 1,000, and my bear case I've ran on projections is around $800 a share. So I mean, when you have a company that's about to go into a growth cycle and your bear case on projections for the next couple years is literally like 3x of where it is right now, like, that is unbelievable. Unfriggin' believable. Because a lot of times a bear case could very well be either dead money or very well just be losing money. And your base case might be, you making a decent amount of profit, maybe, 100%, which is not bad. 100% return in like a year or so, obviously, or a couple years. That's beating the S&P 500, obviously. So the whole thing about it is that AMD is going to be rock and rolling. And so many people know this, and that's why a lot of FOMO is really happening. And don't be surprised if AMD is just going to be making moves like this, and people are going to be like saying, wow, what ended up happening here, right? Adobe is very much a lagging play here. Obviously, this stock is so beaten down with SaaS, but here is another one too with Adobe. When this stock gets rock and rolling, it moves very, very quickly. 2023, mid-June, very much moved quickly. Obviously, very much on a high forward PE, but we're very, very more profitable than we were 3 years ago. So, Adobe very much could be trading back at these very high PE levels, especially in a risk-on environment. Hood has been making massive moves here. This stock was under $60 not too long ago. Oopsies, my bad. Under $70 not too long ago. What the friggers? Hold on. Oh, you gotta be shitting me, man. My internet just went out. Good thing I am recording. Yep, my internet just turned off. What the? Hold on. Well, it's good thing I'm not, like, doing a live stream or anything right now. Unfriggin' believable. Internet is definitely down when I am recording. Hold on. Let me load up my hotspot here. As I load up my hotspot, got to turn my cell phone into a hotspot. 2026. Robinhood is making very quick moves because the market is going to a risk-on mentality. Robinhood is a risk-on company. So that means that when the market is risk-on, the stock is going to perform tremendously here. Okay? Tremendously, absolutely tremendously. So therefore, if the market is very much, there we go, back with internet now. If the market is very much going to risk-on, you're going to see Robinhood fly. And as soon as Bitcoin gives us some justification of where it really wants to go to, and if it is going to be in a upward cycle, you're going to have Robinhood well over $100. You're going to have Robinhood well over 120, and Robinhood's growth rates are just going to continue. In the next couple years, Robinhood could very well be at Coinbase levels in the hundreds of dollars as a share price. Honestly, I very much see Robinhood probably doing a stock split at that time, which I don't blame them because their CEO is very retail loving. A lot of retail people, including myself, I'm a retail dude. The guy does have a big heart for retail, so he's probably going to be doing a stock split in the very near future. But I mean, you're going to have Robinhood stock trading very high. Palantir is the only stock right now that is giving a lot of people hibbity-jibbities. And what I mean by that is really their growth rate. And we really got to see what Palantir really puts up. But I mean, for me personally, as someone who's been in and out of Palantir, in a risk-on market, Palantir can very much go higher. Meta is very much going to be trending into earnings. I've spoken a lot about Meta. Okay, so pretty much what is my game plan going forward? Well, we got to really settle up for earnings, okay? Because earnings is going to be around the corner by the time you know it. We're going to be experiencing right now pretty much a pre-earnings mentality of what we have right now. The first one in the chute is basically pretty much Hood, SoFi, Meta, Palantir, PayPal, AMD, Oracle, and Adobe, TBD right now, very much later so. But Robinhood is definitely going to set the stage because, well, set the stage pretty much for, like, my positions here. If Robinhood puts up great numbers, but they're like, hey, we're still getting hammered, their stock could, their stock could very much sell off back down to the 70s. What happens if Robinhood goes to the 70s? Cha-ching, cha-ching, winner, winner, chicken, lubricated water. I will be buying more. What do I think is going to end up happening to SoFi regardless of what they put up for earnings? The stock is going to sell off after earnings. Why? Because that's what the stock does. Okay? The company puts up phenomenal numbers and the stock rallies into earnings and traders end up selling the stock. I'm not bearish on SoFi. I'm just being realistic because that's what the stock does. We're probably going to have a delayed rally on SoFi after earnings, but there's going to be a sell-off. Meta, I really do feel that their company, Mark Zuckerberg, is going to come out, probably squash a lot of fears around CapEx spending. Palantir, I do believe they're going to beat their growth rates, but the market may or may not give them a high multiple. PayPal is going to be interested to see what they go ahead and pretty much do since they fired their last CEO, essentially. And AMD, we got to get some news about their new chips. We got to get some news about OpenAI buying chips along with Meta. It's going to be very exciting times, people. So I'm going to go ahead and close up today's video. Once again, congratulations to every single person out there that has been buying this massive drawdown. Over the next couple weeks, we are in a time period where this market is more than likely going to really recover very nicely. And understand and remember why you got into your stock positions. So many people got shooken out of their positions over the last 5, 4, 3, 2, and 1 months. It's sickening. You got to ignore the noise. And you got to remember why you're getting in. And if you are trading these companies, that's a different mentality. I am a trader, and I do have trade positions. This YouTube channel is very much dedicated around pretty much like investing in growth companies. But I will say this. If hypothetically, I opened a trade position into SoFi at 25 bucks, and my trade position is negative 30 because now the stock price is in $17, $16. For a company like SoFi, I would be adding to my trade position. Now, I would be starting to exit my trade position if I was hypothetically trading SoFi, probably near back at all-time highs. Traders and investors of SoFi, we are intertwined. Because we know that SoFi is going to go back and beat all-time highs. It's just really the matter of when. You got some traders saying that SoFi won't be in the 30s until next year. That's honestly a wrong opinion in my belief. Hey, I could be wrong. You got some traders that believe SoFi is not going anywhere. It could very well be dead money. Pretty funny. But overall, the vast majority of traders and investors in SoFi, we know that the stock is going to soar. I don't believe in trading SoFi because the company long-term has a very high expectation and the management team is just up to the right. So I would very much rather capitalize and make life-changing money by being an investor in the next couple years rather than really risk trading, getting in, getting out, getting in, getting out, getting in, getting out. So remember why you get into your positions. And Tomorrow, we'll be covering more interesting stuff because, man, this stock market, it never gets boring. All right, everyone. If you enjoyed today's episode, smash the like button, subscribe for more. Obviously, we are experiencing a little bit of a pullback right now. Maybe I jinxed the rally. Who knows? But hey, the market seems to semi have a bottom. And it's going to be very interesting times over the next couple months here. Later, everyone.